What happens when one of the biggest holders of US debt starts selling off its Treasury bonds? That's exactly what Japan is doing, and the world is watching closely. Japan, a key economic powerhouse and a long-time financial partner of the US, has been reducing its US Treasury holdings. This move isn't just about finance, it's part of a bigger game involving trade wars, economic strategy, and geopolitical maneuvering. This isn't the first time Japan has made strategic financial moves in response to US policies, but these stakes feel higher now. With global economic uncertainties, inflation fears, and shifting alliances, Japan's actions could have ripple effects far beyond Washington and Tokyo. The big question is, what does this mean for the future of global finance? At first glance, Japan's decision may seem like a routine financial adjustment, but there is more to it. The timing suggests that this isn't just about portfolio management, it's about leverage. The US recently imposed tariffs on Japanese electric vehicles, aiming to protect its own industry. Unsurprisingly, Tokyo wasn't thrilled. Major Japanese automakers like Toyota, Nissan, and Honda are now facing tougher market conditions in the US, and Japan's leadership is looking for ways to push back. One powerful way to retaliate, cutting down its holdings of US debt. By hinting at larger-scale bond sales, Japan signals to Washington that it won't accept protectionist policies without consequences. This move is not only about trade but also about showing that Japan still holds significant economic influence over US markets. This isn't an isolated incident. Over the past few years, the US has been taking a more protectionist stance, especially in key industries like EVs and semiconductors. Japan's response is a reminder that these policies have global consequences, and major economies won't just sit back and take the hit. If you enjoyed this breakdown so far, hit that like button and share this video. It helps more people understand these critical global economic shifts. Japan has historically been one of the biggest buyers of US Treasury bonds. For decades, this financial relationship has helped keep the US economy stable while giving Japan a strategic foothold in global finance. But now Japan is reconsidering its role. Rising US interest rates, a weakening yen, and shifting trade policies are forcing Tokyo to rethink its strategies. One key factor here is the value of the yen. Japan has long relied on a weaker yen to boost its exports, making its products more competitive abroad. But with inflation pressures and rising import costs, Japan's government faces tough choices. Selling US Treasuries could be a way to stabilize the yen, though it comes with risks of its own. At the same time, Japan is looking at how other countries are handling US financial dominance. China, for example, has been steadily reducing its US bond holdings, seeking to lessen its dependence on the dollar. If Japan follows a similar path, it could mark the beginning of a larger shift in how global economies interact with US debt. If Japan starts offloading a significant chunk of its US bonds, the effects could be massive. The value of the dollar could drop, market stability could be shaken, and interest rates in the US could rise even further. This would add pressure to the US economy, especially with concerns about inflation and debt sustainability already in play. But Japan isn't immune to risks either. Selling too many bonds too quickly could cause volatility that might hurt Japan's own economy. A stronger yen, while good for controlling inflation, could damage Japan's export-driven growth model. That's why Japan has to be careful. Its move is powerful, but it's a double-edged sword. Japan also has to consider investor confidence. A sudden move away from US Treasuries could make global markets nervous, leading to unpredictable consequences. And with Japan's own debt levels being among the highest in the world, financial stability is always a delicate balancing act. Japan's actions aren't happening in isolation. Other major economies, especially China and South Korea, are watching closely. China has already been reducing its US bond holdings for years, and Japan's move could accelerate a broader trend of countries stepping away from reliance on the US dollar. The European Union is another major player that could take cues from Japan's strategy. While Europe has been more diplomatic in handling US protectionism, the idea of shifting away from US financial dominance isn't off the table. If Japan's approach works, other economies might follow suit, leading to a significant transformation in global trade and finance. This raises a bigger question. Is the global financial system becoming more multipolar? If more countries diversify away from US bonds, it could weaken the dollar's position as the world's primary reserve currency. That in turn could reshape international trade, investment flows, and even political alliances. Should Japan take a stand against US tariffs, or will this move backfire? Drop your thoughts in the comments below. Beyond economics, this tension has political and security implications. Japan and the US have long been close allies, especially when it comes to military strategy in Asia. But economic disputes like this one can strain even the strongest relationships. The US-Japan alliance is critical, especially with rising tensions in the Asia-Pacific region. China's growing influence, North Korea's unpredictability, and the broader shift in global power dynamics make stability between Washington and Tokyo more important than ever. If economic battles create rifts, the geopolitical landscape could shift in ways we haven't seen before. Other US allies are watching too. If Japan takes a firm stance against US economic policies, could other nations follow? Could this lead to broader fractures in traditional alliances? While these are still hypotheticals, the possibility of long-term shifts in global power structures is worth considering. The big question is, how far will Japan go? Will it continue cutting down its US Treasury holdings, or is it just a warning shot to get Washington's attention? One possibility is that Japan and the US reach a deal, perhaps some easing of tariffs in exchange for Japan maintaining its bond investments. Another scenario is that Japan escalates its financial response, triggering market disruptions and forcing Washington into difficult economic choices. Either way, the next steps will shape not only US-Japan relations but also the broader global financial order. As we watch this economic chess game unfold, one thing is clear: the balance of power in global finance is shifting. Countries are rethinking their dependency on US debt, and Japan's latest move is just one piece of a much larger puzzle. The coming months will be crucial in determining how these financial and political tensions play out and what it means for the global economy. If you made it this far, don't forget to like, subscribe, and ring that notification bell so you never miss an update on these critical global issues. Thanks for watching. See you in the next one.